In the last week, I read an incredible article by Simon Priestley called The Property Boom is Back. Now, I don't normally do this, but in today's video, I wanted to walk you through some of my favorite parts from the article that are talking about the big and smaller scale picture of the Australian property market and what's coming next. Now, I apologize for the lack of eye contact in this video. There's just so much gold in this article that I'm actually going to be paraphrasing and reading some of it straight out to you guys. Now, Simon starts the article saying, a review of the latest release of the CoreLogic data confirms that 3 of the 8 capital cities in Australia and many of the regional markets are now back in boom territory. He goes on to state that the fundamentals in many of Australia's townships look so strong that boom conditions will spread to many of those in coming years as well. Now, Simon goes on to mention something that I've noticed and been talking about online since the start of the year, and that is after December, when we moved into January, confidence has returned to the market. We've seen more people rocking up to open homes, places selling much faster, properties in many locations selling above asking price, and auction clearance rates going way up. All of these things come back to one thing that started to turn in late December last year, which is confidence in the market. Now, I love this part of the article where he writes, pressure creates diamonds. An increasing number of Australians has realised the sky is not falling. Indeed, their own situation is much better than the one painted in the headlines. I love the way this guy writes. He goes on to say that people are getting on with their lives as they should be. In the article, he's got a great infographic which basically looks at the number of days on market or how quickly properties are selling 3 years ago and comparing it to this year. What he found is in that almost every major location, whether it's regional or metro in Australia, houses are selling much faster now than they were 3 years ago. Now, as we continue down the article, Simon goes on to say that buyer confidence plus low housing supply is a combination akin to the pressure that transforms carbon into diamonds. Now, what I've seen personally from buying over $450 million worth of property for myself and my clients in the last 8 years is that property is really, and price growth is really akin to 2 things. One, confidence and when people are feeling good, as well as the supply of money and how easy it is to access credit. Now, when you overlay the third thing that Simon's talking about, which is the fact that there are many people looking for properties and a small number for sale online, it creates a perfect storm. Now, for those of you that know your history or your longer term real estate cycles, this perfect storm should last for the next 3 years and drive property prices in many Australian locations well up. Now, what's interesting in this article is Simon's grabbed a screenshot from the Canberra Times, which was 33 years ago in 1990, when the interest rates were up at 15.5%. Now, the journalist in the Canberra Times at that point is just bamboozled by the fact that even though interest rates were at 15% plus, property prices in Brisbane had gone up 17.2% in that year. Now, one of my personal favourite parts in the article, because I've been beating my head against this wall for the last year and talking about it so much online, is this mortgage cliff. Now, everybody was hyping that up. Obviously, many people were saying, well, look out for last August, look out for December, look out for January, look out for March, look out for July, look out for September, when all of these properties come off their very low interest rate onto a higher rate. Simon says that all of that nonsense regarding the so-called mortgage cliff is now finally not as prevalent. He says, let's not forget that 6 out of every 10 Australians don't have a mortgage. Either they've already repaid the entire home off or they rent. According to the major Australian banks, including our central bank, the biggest proportion or the highest number of people who originally opted for the fixed rate are already off it. He goes on to say that home loan arrears are at a ridiculously low 1%. With or without a mortgage, we need a roof over our head, and there is not enough roofs in Australia. Now, another one of my favourite parts of the article is when he goes on to talk about the fundamentals of the market right now. And he said, based on the current landscape, it suggests that double-digit rates of capital growth in many parts of Australia are on the cards for Q3 and Q4 of 2023. He said it's extremely hard to find faults in the collection of these fundamentals. Now, the first one he looks at is that Australian homeowners are currently enjoying record high equity in their real estate. He goes on to say that well before the RBA started to lift interest rates, a very high proportion of borrowers were voluntarily paying significantly more than their home loan repayments back to the bank, and many Australians are years in advance on their current home loans. The Australian major banks are still reporting that a high percentage of their borrowers have significant savings stashed away in their bank account. Now, he goes on to say that job stability is currently in its strongest position, with the unemployment rate at its lowest point in the last 50 years. And Australia still has the lowest ever level of rental supply in our nation's history, with many markets having a vacancy rate below 1%, including Brisbane, Perth, and Adelaide. Now, Simon goes on to say that large parts of Australia have near record low levels of properties listed for sale, and the pipeline for new housing or new construction is extremely restricted by the high cost of materials, labour, and all of the red tape with the Australian and local governments at the moment. He also looks at the ABS data that shows that new population patterns, including overseas migration, are all en route to record highs. I think I read something recently that the Australian government expects around 300 to 350,000 people to move to Australia in 2023 and about 400,000 people to move in 2024. Now, Simon rounds out the article. He's a man after my own heart, talking about history leaving footprints. Now, he said the big unknown at the moment is still inflation. It is impossible to predict when it might return to a level that the RBA feels more comfortable with. But at some stage, this will happen, as will the reduction in interest rates. Now, according to my own research from the likes of CBA and the other major banks in Australia, most of them are expecting rates to reduce by as much as 1% by the end of 2024. Now, Simon rounds out the article by saying, instead of becoming a prisoner of this small moment in time, the intelligent investor looking at the longer term will take action now, put themselves in a position to benefit most when the interest rates do fall. Now, I saw an incredible article recently, and basically it was looking at the relationship between interest rates coming down and property prices in the Australian market. Now, when CBA looked at this over a 20 to 25 year period of time, they found that for every 1% interest rates fell, property prices on average in Australia over the 12 to 18 months after that period went up by 15%. Now, for many people, if you can buy this little dip in time at the moment where you can save 5, maybe 10% on where you could last year, and then rates fall 1% and spike by as much as 15% in the years after that, plus all of this pressures in the market for the years following that, longer term and later down the track, there could be incredible potential for both medium and long-term gains in Australia's undervalued capital cities at the moment. Now, one of the cool things that Simon does in this article, and I've done another video which was titled something like 50 years of inflation versus property prices versus interest rates, but he's got an incredible infographic here and looks at 10-year chunks across those different indicators. Now, if we look back at the period between 1980 and 1990, for example, interest rates at the time were between 10 and 17%. Inflation was sitting at between 5 and 11%, and house prices during that time on average in Australia went up 158%. Now, if we look at another period that was notoriously brutal, which was probably between 2000 and 2010, so the GFC period, at that time, interest rates were sitting between 6 and 9.4%. At that time, inflation was sitting at between 2 and 4%, and the average house price in Australia went up by 146%. So it is not as clear as the media would have you believe in recent times that inflation or higher interest rates equals poor property performance. In fact, it is so much more complicated than that, and it has to do with confidence, supply and demand, the movement of money, and so many other complex variables that at the end of the day, it's about looking at the big picture longer term and going over the last 50 years, despite interest rates getting as high as 17% and inflation getting as low as 0%, we've seen incredible long-term growth, with the average house in Australia doing an average of 8.2% per annum over that 50-year period in Australia's capital cities. For me personally, I do believe we're in a perfect storm. We're in the second half of the real estate cycle where generally prices in the undervalued markets do extremely well. We've had many people sitting on the sidelines since the start of COVID with cash in the bank, that aren't invested in stock markets and that are just sitting there and waiting for the opportunity with big equity in their investments or their own homes that are waiting for confidence to return to the market. I personally believe that the next 3 years or so could be some of the best opportunities for investors that we've seen since the end of the last GFC, and could potentially be a period of time where many Australians set themselves up for life. I just wanted to round out the video by saying thank you so much, Simon. The information that you put out there, mate, has made me sleep so much better over the last 5 years. And I just want to say a massive thank you for all of the time you put into reviewing history and putting out this incredible information so investors like myself can do much better on their journey to financial freedom. Now, for those of you who haven't already done so, please subscribe to our YouTube channel. Please give us a thumbs up. Please share this with someone who is in the same boat as me and you at the moment, which is considering, should I buy now or should I wait a couple of years for everything to feel better? I believe that the fundamentals, based on what Simon's saying, based on what the big banks are saying, based on what CoreLogic and SQM are saying, look phenomenal. And I think there's great opportunity coming.
Whew, that's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.